Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, November 30th. Well, markets tried to rally a little bit early on in the morning and then gave up most of its gains. It looks like the market's trying to push higher, need some sort of a catalyst. Today's going to be really interesting. We have the OPEC meeting that's going to be finalized today about a production cut, freeze, and that's been going on in the overnight in Vienna. And oil is up now about 2.5% on news that they're coming into some sort of an agreement. Well, we shall see, right? You don't want to just go dive into saying, okay, we're gonna get a production freeze or a cut, and oil's gonna go to $55. But I think that's going to be the max if it were to rally. I think you'll see 55, between 40 and 55, pretty much. That's going to be the larger range in oil. But if for some reason they walk out and there's no agreement, you're going to see 40 to high 30s relatively quick in crude oil. So my advice personally would be for staying away from that, waiting until we digest the gains and or the selling pressure that would come in if they walked away. So looking at a couple of things in front of you is the AAII bullish reading, the American Institute of Investors. You see the big spike here, large spikes. We talked about this, I think, in my previous video, but I just want to show you this little area here. Very, very important. You need to look at this. This is extremely bullish, meaning that we're one-sided. We've been that way for quite some time, but now at all-time highs. We have all of the pundits speaking about how the markets are going to rally. We have the AAII Institute, the largest reading in a couple of years. We've also have the VIX at around 12 or below 12. So we have complacent readings across the board. And obviously you want to take that as a contrarian indicator. You have to be very careful, guys. Do I see a Santa Claus rally? Well, I mean, it's usually inevitable every year. It doesn't have to happen. We've rallied already over 2 weeks straight up. Russell, I've been mentioning 14.5% in 15 trading days. I mean, it's just so crazy for something like that. And nobody talks about it, but if it happened to the downside, everybody would be up in arms about HFTs and algorithms. But this is the day and age that we live in now, that computerized trading is upon us, and that's where at TMT where we shine, is because we've created algorithms to combat these HFTs and these algorithms here to level the playing field of trading, if you will. So very important. Need to understand when those algos are really active, when the dark pools are active, and that's really puts definitely puts your bottom line and of course your P&L in perspective when you understand what's happening intraday. Okay, so you can see this here. Next I want to show you is the, excuse me one second, let me get that out of the way. Okay, next I want to show you is the 10-year, and this is the 10-year at the moment at 2.30%. I do think that we're going to get a little bit of a pullback where you can possibly look to buy into the bonds or the TLT. So something like that at the moment for a little bit of a retracement rally would be acceptable if you know how to trade that. If not, stay away. I do think rates have made a generational low, and I also think that, let me just get this out of the way for you guys. I also think that that bonds are entering into a bear market and will be there for quite some time. I mean, we've had a bull market in bonds, I think, for I believe it was 25 years. So I think that's over, and I think rates are rising, and they will continue to rise. So something interesting, but as a retracement rally, when you come this far that fast to the downside, you always look for a bounce or a rally into a certain area of the TLT, and I'll show that to you in a moment. Next is going to be the bullish percent gold miners. The gold is getting very interesting here, and I think the play for 2017 technical view of what I think is going to happen is, I think you want to look to short bonds on any rally, buy gold on any dips, and of course short the market. I think that's going to be one of the bigger plays going into 2017. And of course, all of this means that you need triggers involved, right? You need the sell signal and the buy signal. But gold is looking interesting. We have the bullish percent, which is based on a point and figure chart, basically in the basement at about 18. So this is looking really nice as a washout area here. Now, if we take this, and let me show you the VIX real quick, and then we'll get into the charts. Again, talking about complacency readings here. When you have a VIX this low, you have to be careful, because this is what happens. You get these large extreme moves, and of course, selling that comes into the markets. All right, and here's the TLT, and this is where we did a low to high. And looking at a 38% retracement here, comes right in the middle of this gap area. I'm looking for a gap fill at one point, rally and a gap fill, either to the top of the gap, or to the lower end of the gap, or the top of the gap, right around here, anywhere between 124, call it, to 126.27. I wouldn't even think it even gets that far. I think that's going to create another opportunity to get short the TLT for a larger move down. Okay, so this is your first move down. You get the retracement, you get the A, B, and then the C is the bigger move. So just keep an eye on the TLT. All right, for further moves. Now here's gold. Like I said, I like gold here, but gold needs to hold the 61.8% retracement of 1173, and this is the gold contract. We have a thin zone here, and I'll show that to you in the GLD. I mentioned that many times. If we break down from the 1173 area, you could have a big flush back to 1100. Now, I need to see a little more backing and filling, but I do like gold. I like gold, a nice big rally into gold, but that may not happen this year. I think gold still looks very heavy, and I think gold's something that you need to be watching. If you're going to look to buy here, you got to take the low of that candle of 1173. I think that's the low, or just below that, and that's going to be your stop. Unfortunately, it's a large stop, so I'd like to see it pull back, come in a little bit, and see if we can test that low. If we can test that low and then bounce, then I think that gold's going to be at least a short-term buy for the moment. Here's the GLD, and just to show you that we are at the 61.8% retracement at the moment. We're at the December high. If we lose that, here's that thin zone that I was talking to you about, and we could flush easily down to about 108, and that's what I'll be looking for in the GLD. Next is going to be the GDX. Same thing, 61.8% retracement, holding well. If we lose that, look for the 76% or the tops of the 2016 entry of this year. Okay, but holding up okay. But I do think gold. I think one more flush for a test, or a test of the lows, and I think that would be that would entice me to start nibbling into a little bit of gold. Spiders, you could see here, guys, big move up after the Trump election. I had some of these downside targets. I'm going to reevaluate all of the targets for the downside, and I do think that we're looking at a break of 219 will get us the 20-day moving average, which would be about 217.80, 217.5, and then of course that 50-day, which coincides nicely with a 216.5. Okay, we'll take a look at that. I want to show you that we do have some negative divergence on a 60-minute. As you can see, price holding up. We have a gap area here, needs to be filled. It's about a 70-cent gap. So if we lose that 219.85, look for retracement to 218.75, 218.90. But we do have some negative divergence. And I want to explain to you guys that we have mutual fund inflows that are coming in today, tomorrow, and then we got Friday, which is non-farm payrolls. I believe after that, you're going to start seeing some selling coming into the markets, taking profits, and also tax selling, which is notorious for the first 2 weeks of December, and then you get a little bit at the end of the month. So just be careful here. We're looking to go and buy the market here again. That's what the pundits want you to believe. Buy the market, and I'm telling you to use caution here. Okay, transports, catching the 8. Of course, you can see how elevated it is. It is bullish, but we're starting to roll over in our RSI. MACD hasn't quite gotten there yet, but it is it's approaching a crossover as well. IWM, Russell 2000 ETF. I think Russell 2000 is also going to be a big buy in 2017. I think Trump's going to get the small business back up and running, and really pump that small business pitch. And I do believe that Russell, as you know, tons small caps in the Russell 2000, and I think that that's going to be the index to buy for 2017. Not here, obviously, on pullbacks. Next is going to be, and last is going to be your Qs. And again, this should show you our Pro Trader Premier video. What we give you, these are just daily signals, but we give you intraday signals as well, support and resistance areas that you can trade off of. All right, hope it helps, guys. Have a great day, and we'll see you tomorrow.